Hi viewers, in this video we are presenting reserves and provisions point of view for the purpose of JAO. So here types of reserves. In this point of view we have 6 types of reserves. These are capital reserve, specific reserve, revenue reserves, secret reserves, reserve fund and general reserves. So try to understand first point of view, capital reserves. These reserves are not available for distribution as profits. So this is the important first line. These are created out of capital profits or not out of business profits and normally not available for distribution as cash dividend. So try to understand these capital reserves are not distributed to shareholders. So capital reserve examples are: one is profits on sale of fixed assets, and another one premium on issue of shares and debentures. Third one profits on business purchases. Fourth one profits prior to incorporation, and finally profit on forfeiture of shares. And some more examples: profits on revaluation of fixed assets and liabilities, profits on redemption of debentures and shares. And second one, specific reserves. It is this reserve which is created for specific purpose and can be utilized only for that purpose. Generally, this reserve will be created for one specific purpose and the amount will be used for that purpose only. This reserve is created irrespective of profits and loss. It is must this type of reserve will be created as a matter of abundant caution to meet loss or unexpected contingency, or to meet an outstanding liability for expenses. Debentures redemption fund, capital redemption reserve, development rebate reserve, etc. Examples of specific reserves. And third one is revenue reserves. Revenue reserves are created out of revenue profits, that means surplus, which are available for distribution as dividend to the shareholders. So these reserves are distributed to shareholders. These are general reserves, dividend equalization reserves, debentures redemption reserve, investment fluctuation reserves, contingency reserves. These are examples are very important for preparing indirect questions. And fourth one, secret reserves. A reserve whose existence is not disclosed on the face of a balance sheet is called a secret reserve. It is also be called a hidden reserve or internal reserve. When secret reserves exist, the financial position of the business is really better than what appears by the balance sheet, except in certain special cases, such as insurance and banking companies. The creation of secret reserves is no longer possible under the Companies Act 1956. These reserves may be used for writing off excessive loss or writing off any asset on which lesser depreciation is charged earlier. These are by charging excessive depreciation, writing down the goodwill to a normal value, by undervaluing stock in trade and goodwill, by charging capital expenditure and profit and loss account, overvaluing the liabilities, showing contingent liability as real liability, suppression of sales, by making excessive provision for depreciation on fixed assets, by undervaluing current assets. So, advantages of secret reserves: to meet the future loss, to increase the working capital, to create confidence in the firms, to strengthen the financial position in the firms, to control the speculation in the shares, not to provide available information to the competitors, to reduce the burden of income tax, to meet the abnormal losses without disclosing the facts to the shareholders, to facilitate payment of dividend regularly even in unfavorable items. So, disadvantages also there for secret reserves. These are: the balance sheet will not disclose a true and fair view of the state of affairs of the business. The management can cancel its inefficiency or company's worst position. It provides scope of misappropriation. And fifth one is reserve fund. If the amount equal to the reserve is invested in outside the securities, the reserve will be termed as reserve fund. The companies will invest the funds outside if ready cash is necessary on a certain date. The funds cannot be profitably invested in the business itself if excess funds will be invested outside the securities. The firms will get interest. And finally, general reserve. General reserve is the amount that is set aside out of profits which is not created for any specific purpose. It is available to meet unforeseen and abnormal losses or for the further expansion of business operations. There are types of reserves strengthen the financial position of the business. This reserve account is shown at liability side at the balance sheet. These are: to meet unforeseen contingencies, to meet abnormal losses, to strengthen better financial position, for better expansion of the business, to provide additional working capital. All the best.